Hi everyone! Before the end of the year, you as a business owner should be asking yourself, do I qualify for the Employee Retention Tax Credit enacted in 2020 due to COVID-19? Well, in today's video, I'm here to discuss how you can identify whether or not you do qualify. So listen up. So what is the Employee Retention Credit? The Employee Retention Credit was enacted for employers to retain their employees during COVID-19 and was extended with the American Rescue Plan in March of 2021. In today's video, I'm going to focus on the American Rescue Plan extension for 2021 only. But please keep in mind that if you didn't take advantage of the Employee Retention Credit in 2020, it's not too late. You can still amend and get the credit, which is a refundable credit, which means cash in your pocket. Let's begin. Who's eligible? And again, let me emphasize, we're only talking about 2021 and specifically Q3 and Q4 changes. So first, as an employer, you have to have W-2 employees who are not yourself or your family. Hence, you cannot be self-employed as a Schedule C with only you on your quote-unquote payroll. Number two, the increase of qualified employers now has gone up from 100, which was in 2020, to 500 full-time employees. So this widens the gap of available Employee Retention Credit qualified businesses. So if you originally didn't qualify because of the number of employees, you might want to reconsider this for 2021 due to the American Rescue Plan. Number three, another group of employers that qualify are those that either were fully or partially shut down due to the government mandates for COVID-19. Think of restaurants, hotels, those who were severely impacted, or those that had a 90% decline in gross receipts. Those individuals have a unique rule that I won't go into in this video, but you should meet with your tax professional to discuss those if that qualifies as you listening on this video. Next is a real big one, real large change under the American Rescue Plan for the Employee Retention Credit, and that is 20% decline in gross receipts quarter over quarter compared to 2019. Historically, that number was higher, so this makes a significant change in eligible companies for the Employee Retention Credit. And the last change to the Employee Retention Credit was enacted to help startup businesses that opened in February of 2020. Historically, those employers were not eligible under the Employee Retention Credit Act for 2020, but are now eligible for 2021. Again, increasing the number of eligible businesses for this huge refundable credit that many employers can qualify for. So now, how does that tax credit equal dollars in my pocket? I knew you are waiting to hear the answer. Well, again, focusing on 2021, the Employee Retention Tax Credit allows for an employer who meets the prior requirements that I just discussed to take a 70% deduction on employee retention tax credits via payroll of up to $10,000 per quarter at 70%. So that $10,000 at 70% equals $7,000 per employee per quarter for up to $28,000 for the year. Multiply that by 10, 15, 20 employees, and you're seeing a significant amount of money coming back into the business. Or if you're like myself and you're looking at this on a quarter by quarter basis, real time, that reduces your cash outflow on your payroll taxes. Meaning, if you qualify for this Employee Retention Credit and you're filing your Q4 2021 payroll taxes, and you do qualify and meet these requirements, you no longer have to pay up to $7,000 per employee making $10,000 a quarter to the Internal Revenue service, the federal government. It is a huge win, but it's also a benefit to employees and individual taxpayers who need jobs. I mean, that is what this whole program established for, is to retain employees, build an infrastructure that our economy can continue to provide jobs, and build a sustainable economy after we pass through this COVID-19 pandemic. So, what's the story here? Meet with your tax professional. Understand these specific rules that are new and up and coming and that are ever changing. That's what we're here for. We're here to memorize these things, to understand the ins and outs, the rules, and to help you understand whether or not you qualify so that you can legally maintain proper books to support the employee retention credit and get some of that money back into your company so that you can reinvest it and build a legacy for your business for years to come. So there is one catch. Even though you qualify and you do have employees and you've done the math with your tax professional and you're like, yes, I get this $28,000, max credit, over a period of time, you do have to be aware that you cannot overlap qualified payroll protection programs throughout the CARES Act and now the American Rescue Plan between payroll costs. What does that mean? That means if you've received maybe a paycheck protection program funds for that quarter, you need to be aware that you cannot take those same payroll costs and qualify for the employee retention credit. There's no overlapping here, okay? So we have to be mindful, and that's why you need someone like myself to work with who can keep you on the right track so that you're not causing or creating a potential audit down the road. So these programs are great for those who really need them. We just need to be aware that you have to qualify, and there are some specific rules, and we have to be careful that we're with all of these funds in relation to the Paycheck Protection Program and retention of employees, that we don't overlap federal funds. So thanks again for watching this video, and please comment below if you have any feedback or questions. I'm looking forward to hearing from you. Like our page, follow us on Instagram at Erica Rene Martinez or Paragon Accountants, and we'll see you in the next video. Thanks.